Welcome to today's Explainer. Look, if you're a financial analyst covering the software sector, you know that finding a company that successfully balances hypergrowth, top-of-funnel acquisition, with relentless bottom-line profitability is basically the holy grail. Well, today we're unpacking Adobe's Q2 FY 2026 earnings call, and let me tell you, it is an absolute masterclass in strategic maneuvering. We're going to build out a really clear, structured investment thesis here. We'll analyze their latest financial results, their aggressive pivot into an AI freemium strategy, and exactly how that shift is altering their forward-looking fiscal targets. So get your models ready for a highly analytical look at the catalyst of artificial intelligence and the core of Adobe's robust financial engine.
Okay, let's dive into this top-line outperformance. Right out of the gate, Adobe delivered a record Q2 FY 2026 revenue of $6.62 billion. And this isn't just a slight beat, either. We're talking 13% year-over-year growth, or 11% when you adjust for constant currency. In a macro environment where, let's be honest, a lot of enterprise software companies are complaining about deal compression and extended sales cycles, Adobe is demonstrating sheer velocity. This top-line number is really our anchor today because it proves that the demand environment for Adobe's tools remains incredibly robust.
Here is our roadmap for today. First, a record Q2 revenue breakdown. Second, how their AI strategy impacts targets. Third, cash flows and operations. Fourth, the raised fiscal 2026 outlook. And finally, number 5, the financial leadership transition. Let's get right to it.
Starting with Section 1, Record Q2 Revenue Breakdown.
So where is that revenue actually coming from? The underlying mix is incredibly healthy across the board. Out of their total subscription revenue, we saw $4.54 billion generated from creative and marketing professionals, which is an 11% constant currency growth. Meanwhile, the business professionals and consumer segment pulled in $1.85 billion, showing an even faster 15% constant currency growth. These figures should give us a lot of confidence in their operational scale. It proves Adobe isn't just leaning on one legacy product suite to prop up their numbers. They're seeing concurrent double-digit expansion across two distinct, massive user bases.
Now, what's really interesting about this next metric is what it represents: $500 million. This is Adobe's AI-first annualized recurring revenue, or ARR. Why is this absolutely critical for your models? Because this number has literally tripled year over year. Guys, this isn't conceptual AI vaporware. This is a highly monetizable, accelerating run rate driven by actual real-world product adoption. It's the clearest quantitative signal we have that Adobe's massive investments in generative AI are already yielding a tangible, rapidly compounding financial return.
Moving along to Section 2, AI Strategy Impacts Targets.
Listen to how Chair and CEO Shantanu Narayan frames this transition. He says, "We are inspired to bring the magic of our new AI products to consumers, business professionals, creators, and marketers to deliver on our mission to empower everyone to create." Now, on the surface, sure, that sounds like standard corporate vision. But for us as analysts, empower everyone is a massive strategic cue. It means Adobe is pivoting hard toward driving unprecedented top-of-funnel engagement and new user acquisition using AI. So the crucial point here is understanding the actual mechanics of this AI freemium pivot. Adobe is intentionally deferring previously planned pricing optimizations for the Creative Cloud. Instead, they're entirely removing immediate paywalls to create this customized, friction-free onboarding experience. Now, tactically, yes, this absolutely lowers their second-half ARR growth expectations from individual subscribers. But strategically, it's a brilliant play to maximize long-term lifetime value. They are actively choosing to capture tens of millions of new freemium monthly active users today, getting them habituated to Adobe's AI ecosystem, all to lock in core enterprise growth for the next decade.
And we actually have the data to prove this friction-free funnel is working. Look at the diverse product innovations they've rolled out: PDF Spaces in Acrobat, the Firefly AI Assistant, even integration into WhatsApp. Thanks to these innovations, traffic on Adobe.com for business professional and consumer capabilities is up 35% year over year. Creative freemium monthly active users surged from over 50 million to greater than 90 million. The demand for AI content creation is absolutely exploding, and Adobe is successfully capturing that immense volume of traffic right into their ecosystem.
That brings us to Section 3, Cash Flows and Operations.
And this brilliantly illustrates the sheer leverage inherent in Adobe's financial model. Even while aggressively funding AI capabilities and onboarding all those millions of freemium users, just look at this operating health. On a GAAP basis, we see $2.24 billion in operating income, which is a 33.8% margin.
But for the non-GAAP figures, the spread we all love to actually model, we're looking at $2.95 billion in operating income. That represents a world-class 44.5% margin. They're funding their own hypergrowth top-of-funnel expansion without sacrificing an ounce of enterprise-grade profitability.
To put a finer point on it, in Q2 alone, Adobe generated $2.17 billion in cash flows from operations. $2.17 billion in a single quarter. This immense liquidity not only proves the quality of their earnings, but gives them the war chest to continue repurchasing shares, 8.5 million of them this quarter alone, while still aggressively investing in AI compute and development.
On to Section 4. Raised Fiscal 2026 Outlook.
Based on the sheer strength of this first half, management has officially raised their full-year targets. They're now projecting FY 2026 total revenue to land between $26.5 billion and $26.60 billion. And more importantly, for the bottom-line watchers out there, the non-GAAP EPS target has been raised to a range of $24.35 to $24.45. This upgrade is a huge signal of confidence from the executive suite. It tells us they believe the macro environment is stable enough and their AI-driven demand is durable enough to carry them strongly through the back half of the year.
Let's move to see how this builds into their ARR guidance, because this does require some nuanced modeling. Adobe is targeting 10.2% total ending ARR growth for the fiscal year. But keep in mind, this 10.2% fully digests two massive variables. First, that strategic suppression of short-term individual ARR due to the freemium shift we just discussed. And second, it includes the inorganic addition of roughly $480 million in ARR from their SEMrush acquisition. The fact that they can maintain double-digit total ARR growth while deferring immediate monetization on tens of millions of new users, that is a huge testament to their enterprise retention and expansion metrics.
Finally, Section 5, Financial Leadership Transition.
So Adobe also announced that Executive Vice President and CFO Dan Durn is departing the company on June 15th to pursue a new professional opportunity outside the software industry. Taking the helm immediately as the interim Chief Financial Officer is Steve Day.
Now, from an analyst perspective, the key takeaway here is absolute continuity. Steve Day isn't some outside hire trying to learn the ropes. He brings 20 years of internal financial leadership experience at Adobe to this role. As the company executes this highly calculated AI freemium expansion, having a veteran with 2 decades of institutional knowledge running the finance organization projects complete operational stability. It really mitigates the execution risk we'd typically associate with a C-suite transition during a period of strategic hypergrowth.
As we wrap up this explainer, we've seen record revenue, expanding margins, and a very deliberate, aggressive shift to capture the top of the AI funnel. But our job is to look past the current fiscal year, right? So the ultimate question you need to be modeling out in your long-term forecast is this: how will Adobe's aggressive friction-free AI freemium funnel compound into core enterprise growth and lifetime value in FY 2027 and beyond? Think about it. If they can convert these 90 million plus freemium users at historical enterprise rates, the long-term compounding effect on their ARR is going to be unprecedented. Thank you so much for joining me to unpack Adobe's Q2 results, and hey, happy modeling.